Welcome back, YouTube enthusiasts, to another mind-blowing episode of Stock Squad, where we dissect the juiciest investment opportunities in the market. Today, we're diving deep into the enigmatic world of SJW Group, and trust me, folks, it's a roller coaster ride you don't want to miss. First up, let's talk about that price-to-earnings ratio (PE ratio). Per TTM, SJW's PR stands at 21.13, with an average over the last 5 years at 32.62, indicating a change in the growth expectations or a juicy discount. But hold on to your hats because the forward PR is a cool 18.80. That's like getting a discount at your favorite store. But wait, there's more. We've got the PG ratio coming in at 2.82. That's the price/earnings to growth ratio, and it's telling us SJW can be overvalued compared to its growth prospects. Remember that a value around 1 is when a stock can be considered undervalued. Now, let's talk insider ownership. SJW insiders own a solid 9.13% of the company. That's like having the whole squad invested in your success. But wait, there's even more financial firepower. Check out SJW's return on equity at 7.25%, return on assets at 2.09%, indicate how efficiently SJW uses its shareholders' equity and company assets to generate earnings. Additionally, with a return on invested capital at 5.07%, all three ratios need to improve slightly if they are to continue attracting investors. And let's not forget about those earnings per share or EPS numbers. SJW is bringing in $2.68 per share, with a promising EPS growth rate of 7.5% over the next 5 years. That's like planting seeds today for a lush financial garden tomorrow. Now, let's take a trip down memory lane. SJW's EPS has been steady over the past decade, with a compound annual growth rate of 0.6%. So, the expectations for the next 5 years are more optimistic. And while free cash flow per share has seen some turbulence, it's all part of the utilities sector roller coaster that needs a lot of capex to continue operating. Although you have to be careful if each year continues to be negative, since the maintenance of the asset can account for a large part of the capex. And the company is not investing to continue growing in the future but to maintain its current production. But what about those sweet dividends? With a current dividend yield of 2.84% and a 7.68% growth over the last decade, it's raining dividends over at SJW headquarters. Additionally, is a dividend king, with a consecutive 56 years of dividend increases. But wait, there's more. Operating margin? Profit margin? We're hitting the jackpot with 22.29% and 12.69% respectively. SJW knows how to generate earnings from its operations, but needs to improve their margins in the near future. And folks, we're just getting warmed up. SJW has seen a stellar evolution in revenue and earnings over the past 8 years. But hold on to your seats because despite this, its market price hasn't reflected its true value, obtaining a lower total return than VO during the last 5 years. Now, let's talk about debt. With a debt-equity ratio of 1.42 and long-term debt equity at 1.24, SJW is managing its debts like a pro. Hold on to your seats as we soar through the skies of market performance. With an average price return of -26% over the last 52 weeks and a market cap of $1.82 billion, wants to be an important player in the water industry. So what's the verdict? Well, analysts may be forecasting $68.83, which represents a potential gain of 21.56% over the next 12 months from the current price at $56.62. For me, a fair value of $65.77 also indicates a possible undervaluation. So there you have it, folks. SJW Group is like a financial phoenix rising from the ashes, ready to soar to new heights. With solid metrics, promising growth, and a dividend fit for kings, SJW is a stock worth keeping an eye on. If you enjoyed the video, don't forget to like, share, and subscribe for more financial adventures. Until next time, happy investing!